Hello, I'm Stephen Gear from Red Roots Property and welcome to this month's Wakefield market update. So if we take a look at the supply and homes for sale, so if we start with the supply, Wakefield continues to grow in scale as we move through 2026. So for example, in February, there were 2,441 properties available for sale, and that's the highest level seen in the past 6 years and well above the long-term average of 2014. Now this means that buyers have more choice than we have seen in a long time. So new listings, i.e. new properties that have come to market, have come in at 533 properties for that month. Now that's above the long-term average and slightly up from January's 488. So that's a steady increase, which shows that the market is building momentum as we move towards spring. So you've got more sellers are coming to market and that confidence is starting to improve, which is great. Overall, the supply is strong. Buyers have options and sellers are operating in a competitive environment. Now let's look at pricing. So the average asking price for new listings in February reached £278,823. Now that's an 8.6% increase compared to February last year. That's a significant shift, especially when you consider that prices were almost flat the year before. So compared to January's £268,049, prices have moved even higher. So that suggests more larger or higher value homes have entered the market. So to take a look at that, we can look at the price per square foot. So your new listings are now at around £262 per square foot. Now that's the highest level recorded and part of a steady upward trend over the past 5 years. And when we look at the actual agreed sales, the average price sits at £262,000, £194 now. Now that's around 1.9% higher than last year. On that square footage again, the sales agreed price was £248, which is the highest on record, so that tells you all you need to know. Now the key point here is that while asking prices have jumped more sharply, agreed prices are rising at a steadier pace, so buyers are still being selective and negotiating where needed. Now sales activity has been really strong. So in February there was 436 properties which were marked as sold subject to contract. Now that's one of the highest figures recorded in recent years and well above that long-term average of 406 properties going sold subject to contract. Now this shows a market where demand is real and the buyers are committing. Now if you compare it to January, we've also seen a clear increase in the value of homes going under offer, which suggests stronger activity at the higher end of the market. Now overall, it's a really active market with strong transaction levels, and as we know, if there's more first-time buyers coming into the market picking up the cheaper properties, and obviously it allows them move up the chains, and then obviously those people looking to then downsize, and ultimately it allows the market to move. Now if we look at the market mechanics, we can look behind the numbers to give us a little bit more insight. So last month there were 333 price reductions, and now that is in line with last year but above the long-term average. Now this tells us that while the market is strong, some sellers are still pricing too high and then having to adjust later on. Withdrawals last month, they came in at 197 properties, which is slightly above average but down from January, and this shows some improvement with fewer sellers leaving the market, which is always good. Fall throughs stood at around 70, which is below last year and also below the long-term average. That's a very positive sign. It suggests that more agreed sales are progressing successfully with fewer deals collapsing. So overall, again, the market is showing good levels of efficiency and stability, and as mentioned before, good demand as well. So what is driving this right now? So there's a few key factors driving Wakefield right now. So the first is the scale and choice. Now with over 2,400 homes on the market, buyers have a wide range of options. The second is value. Wakefield still offers more space for the money compared to cities like Leeds and Sheffield. Thirdly, I'd say is connectivity. With strong transport links and access to major road networks, it remains a popular choice for commuters. And finally, we are seeing that increased activity in larger family homes, which is pushing up the average price. Now all of this is creating that steady and sustainable demand. So what does that mean for buyers and sellers? Well, for buyers, this is a market full of opportunity. There's more choice than before and transactions are progressing more smoothly with fewer fall-throughs. However, prices per square foot continue to rise, which means waiting could become even more expensive over time. So acting decisively when the right property appears is key. Now for sellers, the message is clear. Demand is strong. 436 sales agrees shows an active buyer pool. But pricing strategy matters. With over 300 price reductions in a single month, buyers are not overpaying. Homes that are priced correctly from the start are achieving better results and smoother sales. Presentation and realistic pricing remain essential. So what's our closing thoughts? Well, Wakefield's entered 2026 with some real momentum. So stock levels are at the highest point in years, sales activity is strong, prices are rising, especially for new listings, and fall-throughs are improving. So this is a market that is active, it's competitive, and it's functioning well. So buyers have choice, but they need to act with confidence, and sellers have opportunity, but must price carefully. As we move into the spring market, Wakefield's in a strong position, like I say, driven by that value, that connectivity, and that growing confidence. And it's a market that does continue to evolve in a positive and sustainable way, and all the while the weather's as good as this, we expect that to continue.